All right, let's go through these charts. The biggest thing that jumps out at me, besides the phenomenal move, percentage-wise, historically unprecedented, is always, well, a few things. Red bars being ignored, which is confirmation of a bullish trend. And there's no large red bars, just little red bars. And you'll also notice that most of the bars are about equal in range, so that's bullish confirmation of what's going on. But now we've got the widest green bar in this move up. And when historically, that means momentum is getting ready to slow. Usually what happens, but in this trend, what's happening right now with the semiconductors, I would not be surprised to see a blow-off move into the options expiration, which is this week. Now, the previous week, I had mentioned that momentum was slowing. And while it's up, 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 continuous green bars up, the ranges were contracting. And now this week, you've got a range expansion, which means it's like a fear of missing out. I got to get in now. I know it's up a lot. Who cares? It'll continue to go higher and it'll be okay. Historically, it won't be okay unless you're going to hold, I guess, indefinitely, because at some point there's going to be a correction. And when you jump on board too late, they pull back. And while that may not damage the trend, you've probably been there, done that. We all have. Percentage wise, that would be down like 8 or 9% coming down to that support level. And depending on how you position sized it, that could be significant and you might sell at the low. So don't do that. Now, let's go through the charts. And I've got this sorted this week by percentage from the 50-period moving average, the most extended. And you see the semiconductors is that wide range bar, 31% above the 50 MA. Now, if we go from where the breakdown occurred and then the advance started, it's 56% from that low to the high, and there are no pivot lows along the way, so there's been no corrections of any significance. There was one little sideways consolidation there. There was one correction bar there. But, we look for pullbacks, and there were no pullbacks, and just continued to march higher. The next one, of course, is artificial intelligence, and there's another wide range bar, and those typically happen near the end of the move. Now, end of the move doesn't mean it's going to collapse, crash, or whatever. It could go sideways for 2 weeks. It could pull back and just be in a trading range. But wide range bar after a move of this significance is not a place to get on board. Technology, you can see what's up at the top. It's all concentrated in that area. Of course, there's the Qs, Magnificent Seven. Had at least a 3-week consolidation before breaking out. It's relatively close to the moving averages. That's a buy on a pullback. TAN, pretty sloppy. I don't like this kind of price movement. It's just too erratic. You wind up, unless you give it a whole bunch of room, they're self-correcting. Overall, the weekly is positive and the daily is positive. It's not far from the moving averages. I just don't like the way it trades. That's a personal preference. Odds are it's going to go higher because the trends are up. So this one is bottoming. And there's a lot of, in the stocks, these 2 and 3 bar continuation patterns. This is a correction bar. Now, if the markets are in a good mood, this might just take off into the gap fill. If you're more aggressive, willing to put a relatively tight stop, go for it. It may just run. But situations like this, you also can get whipsawed pretty easy because it's a bottoming pattern. It's very constructive. Certainly suggests it's going to go higher, but it's not uncommon for things to get wiggled around. But that's the unknown. If you can share size it, well, of course you can, but just share size it accordingly. And if it takes out that high, it just might take off. It's a continuation pattern. Continuation patterns give us a clear line in the sand. Get in there and get out there, or if you share size it to give it more room, you can go down to the next level. IWM, erratic, had big down day as interest rates popped up. We'll take a look at them. I'll take a look at them right now, the ETF. But it popped up, and then it came right back down again. This was the market, of course, getting nervous about the war and price of crude oil and inflation, and it broke out and came right back in again, and the market stabilized and they went up. Internet, it's at resistance, so it's made a big move. This is an ugly kind of erratic pattern. There's nothing to do there. This one, it's different, right? Similar but different. It's 3 bars. It's got a big down bar rather than having a correction type of a bar. It came down, but if it can take out that high, it should continue to move higher. So it had a nice move. It consolidated. It gapped up. And while it gapped and crapped, as we say, it didn't come down in a significant way. It didn't fill the gap. It held on Friday, and that's constructive. So if it can start moving up, it should participate higher. Pharmaceuticals, this is what we call a self-correcting uptrend. That's defined by a lot of overlapping bars and gaps, but it keeps moving higher. And this is, I think, I'm pretty positive, the only healthcare sector that's moving up. Most of them are moving lower, and they're be down at the bottom of the range. Because we've got this sorted. So at the bottom, they're going to be under the 50 MA. Let's go to consumer, discretionary, and this is all about Tesla. Take a look at that chart. It's going to go higher. There'll be buyers on pullbacks. It's stalled at the prior high. As always, if it can go sideways at the prior high, that's bullish price action, and that would suggest going higher. Biotech is erratic, similarly at the prior high. And as a rule, when we see erratic price action in a lower time frame, we go to the higher time frame. Compressing the data generally makes it, I say, understandable, or let's just say put it in alignment with how we look at, how we want to look at the chart, meaning relatively tight, a nice pullback from an uptrend, and it begins to make a turn. So if it takes that high out, it's going to go higher, but that doesn't mean it won't whip around. So you got to give it a lot of room. Regional banks, they had a nice move. They have all of this opportunity to come down here and fill the gap, and they haven't done it. And when it gapped down here, it popped back up again. The 3 days, I wouldn't know if I'd call them tight, but it's holding in this area. Definitely watch this week. Financials have not been doing well. They're not been doing terrible, but XLF, which we're going to take a look at, doesn't look so good. But maybe it turns around. If interest rates come down, maybe they'll take off. So relatively tight here. If it takes out those highs, it should go up toward the prior highs. It's not a huge move, but it's been consolidating now for, I guess, almost a month. And if it breaks out, it should continue higher. KRE, which is here in the S&P sectors, it's moving up. It's just really choppy. Now the transports. This is primarily one stock in there, which I don't know why it's not being taken out. CAR, you can see this crazy move where there was a short squeeze and it came all the way back down again. So you want to look at transports, look at IYT, and that's a truer representation of what's going on with the transports, and they're near an all-time high. And it's kind of sloppy, but looks pretty good. Industrials, another sloppy one. TBT, interest rates. Materials gapped up and it held on Friday. It was an inside day. You might look at this and say, hey, that's a 1, 2, 3. And I would have to say, yeah, it is. But in the context of this structure, it's not a 1, 2, 3 that we would trade. Even if it does move down, the next area of support is right here. There's a 50 MA. What we would like to see, since this had a strong move up and it gapped up, is it begin to inch higher. So ideally, what would happen this week, and I don't have a chart of the internals here to show you, but sentiment is already at a bearish extreme, too many call options. but breadth is near zero, so there's no signal of risk off. But if all of these laggards start to participate, and by the end of the week, everything's firing on all cylinders, and then we're going to get a risk-off signal, which doesn't mean it'll collapse immediately, but historically it'll tell us that it's really close. So, yet to be seen. Communications, I mentioned the previous week coming down into this converging moving averages, that it should stabilize, and it has, but it's just hanging there, not really doing too much. And here's the financials. They had that strong move up, and it's just been chopping back and forth. And I moved it to an uptrend because of this move, and I took out all of these pivot highs. And when it moves from a downtrend so abruptly to an uptrend, most times it goes up. And now it hasn't been able to get out of the way. And on Friday, it actually moved lower. It held the pivot, but if you look at some individual stocks, it doesn't look good at all. This one is on its own page, but so many of the others, Goldman Sachs looks okay, but look at this one, breaking down severely. So there's a lot of divergences between the individual stocks within the sector, and it tells me stay away. Now our staples, if it can clear these highs, and this is a defensive sector, but money's looking for places to rotate into. Some money may come out of technology and come into here just as a hedge and help drive it higher. Gold. Now, this had made this big move, and I was mentioning in the pre-market reviews that most times what we do is, pattern recognition. It results in a similar move, that it goes back down after the first one. Now, this retraced pretty far, but then it back down again. I thought it would test the 200 or come down here or make a lower low, and it's popped right back up again. So it's below the moving averages, but it's improving. And silver, which we're interested in, looks a bit better. It's closer to this high, and it made a higher low. So if it can break out, it should start to move up. Now, what's going to drive this up? Just might be interest rates going higher, and money will rotate into here and into defensive and out of semiconductors. But keep in mind, this is an options expiration week, so it's highly unlikely the market is going to go down in any meaningful way. If anything, dips are likely to be bought, and it just might take off, and we'll see. This might just chop around a bit. Well, as always, we just have to see how it plays out. Home construction, interest rates jiggled around, pushed it back down again. A lot of uncertainty there. Aerospace and defense, not doing much of anything. No interest. Here's the home construction. That looks like some bad data there. I don't think it went up like that. But if interest rates should start coming down, I think what should happen, because historically it's what does happen, is this starts to move sideways and starts inching back up again. Right now, it's weak. Utilities, how things change from over here, where it was all about AI and needing energy, to now it's kind of like just back to being a utility and just whipping back and forth, indecisive. We have no interest there. Healthcare, looks like it can go lower. So far, it's holding the lows. Healthcare equipment, not a nice chart either. XLE, that broke. It came up and, whatever USO is going to do, which is still in an uptrend. It's pulled back toward a support area. And really, we don't want to see this going up, because that would most likely mean that this silly war is escalating. And if this is going up and TBT is going up, well, then the markets are going to have a real hard time to go up. They may not go down a lot, but odds are they're not going to go up. Medical devices. I suppose I can say is this, I think, needs to begin to accelerate and become climactic to the downside And you can see it's got plenty of room to fall. But if it did that, that's where a bottoming process could begin. That could look something like that and get turned around. Also yet to be seen. Well, we looked at some of these already since they're all in here, and I'll just poke through them. Real estate, industrials. You can see there's a lot of sloppy charts, and the media just keeps talking about how great things are, and primarily AI and semiconductors and technology, and they comment that it's one of the greatest earnings report seasons. It's so great, and if it was so great, why aren't the majority of these sectors moving up and stocks moving up? Because it's all concentrated, and that's what's going on. And so we'll see if this week some of these laggards can begin to play catch up or bring up the rear. And I think it's, again, all about interest rates. If they go up, those laggards probably aren't going to do anything. And if it clears these highs, so you do want to set an alert to be aware of that, because you just may want to be hitting some bids to get out of if you're in individual stocks, because we may see a little bit of a downward draft. So as much as options expiration tends to put a cap on things, or the term is pin them in a certain area, this breaking out above those highs is likely unpin them. And breaking down below those lows, or inching down toward those lows, will help bring money into those laggards. Now, as far as SPX goes, a close below that red bar is likely to be the start of a corrective process. Now, it doesn't have to be big, but a corrective process and a trend like this, percentage-wise, can be relatively significant. But this 7,300 area in here is going to be significant. You can see it's in an uptrend on the 65-minute. There's that line in the sand under Thursday's low. It consolidated into the end of the day on Friday. Bullish price action. That means traders, institutions believe it's going to go higher. There's plenty of option bets that are already betting on 7,500 this week. It may be happening, but a breakdown under these lows, well, for day traders, there'll be buyers down there, but we then may just see move down toward this gap. Now, if that's in the cards, nobody knows if it is. One of the things that's been happening is on the dips, traders are lurking below, and they're getting in before the gap fill and driving it back up. So keep an eye on that. If there is a move to the downside, there's an unfilled gap, right? It's an inside gap in between bars, and this is just a gap between bars. So you want to be aware of those as this week moves on. As always, if you have questions, email us, Greg and Dan at Master Trader.